All right, so this is Mr. Donovan from Ghana, Doris FS Trading Enterprise. Today we'll be doing some recording about gold from the year 2020. So let's move. So we'll also be considering a hammer pattern, hammer candlestick pattern, and you can see here some of them. The arrows are showing all the hammer candlestick patterns in the market. We will also be looking at our take profit positions between 161 and 261. $161 take profit. So if we sold this, you'll be getting a loss. And I, under normal circumstance, will not sell that because I know that's a running flat. So we're buying up here. And looking at how price has consolidated around that place, we'll be getting out for a break even. So as we move along, still continue to watch the candlestick patterns. Now price has reached 261. Looking at upon this sell with the price going up to break the previous day high, if price come down to that position, we are not taking, we are taking it for a break even, and we are not getting any trade again to the downside. We are expecting only buys. We would have considered price to be like this and that, and this buy should go. And if we are in this trade, probably take this for a break even around here and expect more buy again somewhere around here. And we had this pullback. So price continue. And we got to realize that's not the only, this just a one move to the downside, as we have ABC that's considered as one. Probably this is not, we just consider this to be A, B, and C, and it falls. This is just one of the two. We'll be expecting one of these pools definitely upside there. So price has hit 423.6%, and yes, so this is one, and this is another similar one, similar size of it. So are there patterns within? Yes, there are other patterns we did not indicate. This to be a running flat of which we can buy above it. But at this very price, 423, we'll be very careful, because at that point, price can want to retrace downwards and give us a bigger pattern. But in this very case, we had price to continue trending up. This is some of the candlestick, the hammer candlestick. So as we move along, we'll be looking at most of it. We have considered, you see this at the entry point, but yes, so price continued to trend down, of which a good profit was made. So at this very price, we set our target flame for this very one, also this pullback in between 161 and 261. Price starts to watch retrace. Here we have a running flat here, we are buying into this. So you can note that not always the candlestick, the hammer candlestick goes to the up position. You can get this hammer candlestick and yes, still price will fall. Sometimes just a temporal pull with this, we can get a sell entry around here. So it's a hit and run trade as usual. And we are going to take our 161 take profit point with this very pattern. The price is not get to 161 and it starts trading down. Would this sell? Fall? Okay, you can see we are still in trade. Price did not break the the major pattern low, which is the base. So what are we going to look at here? Let's show price to see what really happened in the market. So price has been trending up to this position. Would we be looking at this to be A, B, and C? So this will not really go up much. Would have expected price to retrace above this very side and then fall. I didn't. So with this, we'll be looking at price falling. So we had this also, we have A, B, and C, expecting this to go, but not really. So you can see price is also basing down here, and that price eventually break the low, giving us a what? The pattern below here, which is the base as part of the pattern. So nice trade there. So let's just increase the size of the candlestick and then go back. So in between 161 and 261, actually I would have expected price to go here. And if you're a kind of person who looking for a petty profit, you bought this and you end up in a loss. So you also take note the risk reward before getting into trades, unnecessary trades, not letting the market rest. Every tiny move you want to profit from it. So you realize that usually price does not really break this low. Sometimes get to this position and trade back. So at this very base of this expanding flat, price was there and it started retracing up. So how far do you think it would go? Let's see. So this is an expanding wedge, and how far would we expect it to go? The price hit the 161 almost. Price did not get to the 161. Now looking at the tiny trades within, we're going to consider because we are trading the tiny trades. Yes, just like that. 261 with the take profit. So somewhere here, we have this buy, take that profit. Then you have A, B, and C here giving us an expanding irregular flat, of which you will be looking for a buy position from that point. Or contracting flat. So you can see with our arrows, price has been giving us hammers. So at a certain point, you know that the hammer candlestick pattern is no more showing. And from that point, we'll be looking at it with our bare eyes. So there is another buy entry around here that we could get into trade. Around here. Yes. So there was this entry also. If you want to know the take profit flame of this whole thing, here is it. So we are in September 2020. We are actually recording up to December. So in between 161 and 261, you can see there was a pullback, of which that pullback was about 120 pips. No, 300 pips. Price came below the 161, 261, and then what? Retraced drastic. So let's watch. So there was this pullback. So from here, there was this sell entry. The best thing to do If you would have placed our stop loss right above it like this, it would have ended up in a loss. And even with this this pattern here, would have expected price to what start going up, giving us what an expanding flat, where you'll be looking at this as an expanding flat. You can see that we have been tricked, and this was not an expanding flat, and it ended up being a sell again. The price is not always as it seems. That's a quite tricky one. So if you put your stop loss right above yesterday's high, would have been the best stop loss point. And there was another sell entry right below here. But because of this candlestick, we are not placing that. We rather place it below this very one. And you can see the candlestick is an indication of what? A hammer candlestick. Hammer candlestick. When it is green, we put red so that we can easily see it. It's not because of anything. Yes, so let's continue. Let's see how far did we get this very current pattern to move to the 261 street without any delays on the road. So here we have a double bottom of which we will have to buy. So double bottom, you have one here to buy, another one here. Let's look at our take profit flame. Usually the double bottom 161, we take our profit. Then we expect retracement, but at the neckline of the double top bottom, we had price to what to give us a pattern, a running flat at which we could buy more to the 161. Price retrace giving you A, B, and C pattern. You could buy this, be in that trade, price pull back, getting back into position, giving you a running flat. And if you put your stop loss right below here, you have your stop loss being hit. If you put it right below here, then your stop loss is still what in a good position. And you could see how price was retracing here. If selling down here, it will not be the best. Usually we do sell only if price would give a deep pullback like this. So here it was not the best position to be in a sell because we have a pattern upside there. And even if we get that sell from that top side, we will still get a chance to break even up here. Several reasons to get the break even. So that is what the market presents you sometimes. And if this very buy, you end up in a loss. This also in a loss, but you have to put your stop loss below last week low to be able to escape such a loss, which is a whole lot of pips to risk. So a whole lot of pips, about 7,700 pips. I think it's 707,000 because we already know that with gold, it's very expensive. 700 pips, 700 pips. All right. So price at 261. This gives us a nice pattern with our candlesticks. We have a pullback. We would have actually expected price to start moving, shooting up from this position, but now price came back to what our retracement point, giving us a break even. We get into this buy again, probably. We put our stop loss 26 pips below last week's low. So we would have expected this to be A, B, and C, and it ended up here. We have to buy, so we'll be in a trade here, upside here. And if you put your stop loss right below yesterday, set it below yesterday's low, you actually have to set it at the whole pattern's low. But if you set it right below here, your stop loss will get hit. So that's how it ends up. So price you could still strange. You're ranging at 162, 61. Let's see, did it take the same level of this? Actually, it didn't, but it was close. And also price came to break this high. So from this point, what will you look at? What would really happen in the market? I can't really tell unless I see the current pattern at hand. So actually, it will be in this sell. It's a good sell. From there, no. Well, this very sell downwards. But I will not expect much of this because of the break of this high, unless I see it in a bigger form. Break of this high. Okay. Okay. So we will expect this to be A, B, and C. So with this, you could see that price was what, an expanding flat. And I didn't really see the first time. I like what I'm seeing right now. Let me go with this very color, the bigger time frame. We'll use the H daily time frame for that. We are in September now, 2020. So we actually had a pattern here, a regular flat, which actually came down more. We would not really expect much. On this, we be expecting around here, it should start shooting up, but it didn't. It actually give more profit. So we break it up. So 161 of the what? Of the double bottom. I think it's about time to close the double bottom, take profit, or we should keep it, or we could. So with this, let's look at our take profit position. Yes, we have 1 point from here, which is the whole frame of it. So price at 161 starts retracing, and there was one more pull down. If you saw that, you will be able to take this for a break even after seeing this. So I would keep this frame. This frame is actually nice. Actually nice. So we have minor take profit and the major take profit. So this, the minor one, and you could see actually cannot really see where price has got to. Okay, in between 161 and 261, price got to that position, start retracing upwards. So the candlesticks, you are still seeing these very colors. Which one is this? It's not supposed to be blue. It's supposed to be red. No, by so we did very well. The take profits flame will take the whole of this. So if you bought up here, you should be able to take break even after this. Even your stop loss is right below here. So in between 161 low. So let's just say 161. Price increase downwards drastically. Let's just shrink price and see how far is price ranging. Okay, so here is it in between 161 261. So we had a pattern there also, huge pattern, a regular flat. So someone will just sit back and say, wow, this very chart is rough. Yes, it's rough. And there are many things we are learning from it, so it has to be rough. We want to keep records for future sake. And it's not done for the purpose of anyone else, it's done for a personal use. So if you do not really understand the chart, then fine, you can see whatever you say. And this, if you bought that, you ended up in a loss. This is a buy. And if you bought this, you'll be able to break even. Would you also consider this A, B, and C, and this should go? And yes, so you'll be holding on to this buy. Well, with the pattern of this very one, you see that it's not really going anywhere. You should take it out for a break even. We have a regular flat. Let's say our take profit position. In between 161 to 261 prices. Trending downwards. So there are major stuffs you are watching in the market, and later on the minor ones will come down to watching them. You see price got to the same level, and if we see this as a running flat, let me just see down there, running flat, we will not be in a trade because of our entry strategy, which is 6 pips below our pattern. So down there you see there is no entry. No entry. So we have this very flame, take profit flame. The whole question is, this whole take profit flame, is it going to pass the upside of this very one, giving us, showing us an indication of a new a new trend? That's a new pattern. So if you sell this, you end up having a loss. You could see the hammer candlestick. At this point, we didn't reach this place with the hammer candlestick. Hammer candlestick. How effective is the hammer candlestick in the market? This will be a loss if you place the trade on it. So we'll get time and come and watch the weekly stop loss setting strategy. Is it very effective? And others, would when we place a trade in this week, can we be able to have our stop loss set to a good position? So this would have ended up being a nice loss. We wouldn't have expected this. But let's see, this was a new week. The previous week was broken. And the price trend continued trending up. Would we be in any buy from this place where we were expecting to put our stop loss below last week's low? Well, with this, we had a break even. This is a running flat. This sell, with this buy, we have to put stop loss right here. That's when we are using the weekly chart as a stop loss position. This buy, yeah, with this very candlestick at 261. What can really happen? I can't really tell, but I can tell that one, we have our take stop loss setting at below last week's low, if that should be, or the patterns, the current patterns low, where our stop loss will hit. So this very one, you could manage the trade to get into break even. So with this, put your sell entries right below here. You could manage it to a break even position, or you could also end up in a loss. You could end up in a loss. That can easily also happen. I'll take the blue, which is the neutral position. You have to put your stop loss right above so you can see the candlestick, the hammer candlestick is very important. Very important. You can see A, B, C running flat. You sold this buy, you should be in it. It's a buy set up here. It's a buy opportunity up here to be. And this sell, you would have been seeing it not really taking much, and you can see it didn't break the impulse. We have ABC. You have this coming back again to this position, break even. That would cost a lot if you have to hold. So currently we are in December, and within December, the price in December are very boring. So let's look at where we are coming from, which is the whole flame of the market pattern. You can see this has break the low, which is 1, which gives you an indication for something. It's really, can it be that this is a running flat? Let's see. The size enough for it. I say this is it. This is it. Actually, it might be confined, but it's too small. Like I would expect price to come down and say that would be more perfect for me. Should I just leave it alone and say this is just one of those patterns that pull back and go without running flat? Yes, you could also consider that. So where was our take from an impulse? We have 162.61. There was a deep pullback and price continue trending upwards. Did it reach 423? Let's see, in between 423 and 261, what price happened? All right, so we have 423 up here in between 261 and 423. That was what happened. So we don't want price conflicting the take profit position conflicting with other take profit points. So that's it. Let's go back. Where is it? We have that, this. So price to come and break the low previous week, of which price starts shooting up to break the previous week's high, indicating a more buy position. All right. So with this, we would have been looking at that since last week's high has been broken. We would have been looking at this to be what? A regular flat. Well, if that be a regular flat, that means this one's low has been broken, which is not supposed to, indicating a sell. We expected this to sell and it didn't, went up again. We'll be looking at it, what is really happening. Did this very one also break the previous week's high? Yes, it did. So you can see price is actually in this very position where this is another pattern that we have at hand, where take profit is that to the low 161. Most of the time it hits. Let's watch 161. We had it. So the whole story is, let's watch this. Let's draw it very well. We have that. This was what we actually did the previous time. We just noticed that it's giving us one of those patterns that we usually have an expanding flat. This is not at the base, this is at the top. Resistance level, stage. So this is a perfect sell for us. That'll be all for 2020, 6 months records, 6 months transactions in the FX market. And the earlier stage is a loss here. There's a loss there. So that's it. That's it. Buy, sell. And you can see our hammer candlestick. So that's very nice. So that is all for now. Thank you. So the whole story about record keeping doing this video is to see whether our strategy works. And if the strategy works, also to ask how can we really profit from using our strategy, which is also very important. So this also gives you the confidence and continuous learning and assessment. Let's just go and watch the H4, how the market reacted the H4 pattern, the H4. All right, so this is where on the H1 we were allowed. All this was H4 records which is available. Well, I think I could even use much of it to my advantage. Okay, if this is on the H1, that means on the H4, this is where we start with our H4 records where the market was able to load patterns, candlesticks for us. So on the H4, this is what we had. So I didn't really see this in the beginning. And with this, you know, this is running flat. You get a buy. So all these buys are reasonable at that stage, which is very good. So with the H4, let's shrink price and understand the few price movement that we have at hand. So this, you saw this, and it's an expanding flat, a running flat, sorry. Running flat here. So you can't only get your full information on the H1 time frame, no. You need other time frames to be able to get the full information. Actually, I like this pattern. I'll come back again to this pattern. So you can see at the base, but here is January. We'll come down to January. Here is at the base of it. We'll come down again to that price. Let's say by next tomorrow, doing a video analysis of it. This we are in February with this. No, we have not reached there yet. We have not reached that positions yet. Last week high, which was broken. Yes, this is where we have the expanding flats where we know price will retrace 161 and it got there before retreating back again up without breaking the previous week's high, continuous selling. So we'll be looking at the weekly analysis, the weekly charts. We are going to deduce information from that part. So we love this. Line. Yes. That's, yeah. Method. So let's go and watch this very pattern itself on the H1. Very reasonable. As you got it A, B, and C, you should know. It was so simple. A, B, and C, and it didn't give you another third one. Then it start falling, break the low, give you an expanding flat, pull back without hitting the 1-to-1. It could also sometimes hit, get to the same level of the base without breaking the low, pull back again, then it gives you a 4. From that 4, we have a double bottom. Then the double bottom was also becoming so complicated. Double bottom, then we had an expanding flat. Then we had our almighty pattern to be complete at this base also. So that is all for now, and thank you. Let's end this video now. Love this.